something changes. And I think what's going to change is the world is going to go through such a financial and government debt crisis. We're left with one alternative. Okay. Silver got punished very badly 2 weeks ago. And I think the people who shorted, dumped silver a week ago, made a big mistake.
Gold is rising, but it's not alone. Something bigger is happening beneath the surface. Silver just bounced back like a rocket. And gold miners? They're suddenly outperforming gold itself. Michael Oliver says this isn't just a rally, it's a breakout. So what's really driving it? And why could this be just the beginning? Watch till the end, because if history's repeating, the biggest moves are still ahead.
If you go back and look at other bear markets in the stock market and see what was a good place to be, 2000 to 2002, for example, gold went up, not explosively, it was just beginning its bull trend that went to 2011. But it bottomed in 2000, 2001 when the stock market started down. T-bonds went up, meaning yields dropped. So it was an alternative place. Same in 2007 to 2009. There was 1 month in there where gold got hit, but basically gold was going up in a major trend through 2011. T-bonds worked too. They were a good place to be. I thought this time they might be too, not because of that fundamental assumption. The technicals looked right for a T-bond rally. Now, I know the U.S. T-bond market's, a pile of manure, okay? And it's in a crisis mode, and I know that. And a lot of people I give credence to fundamentally and so forth say, this is garbage. Don't own that stuff. It's going to go through a crisis. I agree. But temporarily, it looked technically like T-bonds could rally, and they would do so when the stock market started to break hard. Well, sure enough, you go back a month or so ago when the stock market started to break, and T-bonds did move up. They moved from price levels like 115 up to 122 on the long-term 30-year bond futures. Nice, sharp move. And all of a sudden, in literally 48 hours a week ago, T-bonds spiked up to 122 plus, and they got to 111 within a couple days. Now, you say, well, 10% drop or so, no big deal. Well, for T-bonds, that's a crash. Okay. Something happened there, and it wasn't because stocks went up. Stocks were still going down, and bonds went with them. So that report you showed there, I was questioning at that point whether T-bonds are still any good, and there's no issue in my mind. They're not an alternative place to be. That's our one fumble over the last year, is thinking bonds could rally. Well, they did. They had a nice spike, but boy, did it fail. And we're left with one alternative in our assessment, and that's monetary metals. It means gold, silver, and the gold miners.
The big mama gold, as you call it.
Yeah, the mama market is gold.
Yeah.
And the little babies on a leash, or little puppies on a leash, would be silver and the gold and silver miners. And if you go through history, you'll see there are times when they vastly outperform gold on the upside, and then there's times when they vastly underperform. And over the last 2 years approximately, they've underperformed and gotten, well, now the miners have broken out. They've broken out versus gold recently in the last month or so, meaning their relative performance technical behavior of miners versus gold. Like divide the price of GDX into the price of an ounce of gold and plot it, okay? That is broken out and telling us, in fact, before the recent surge in net price in the miners, it told us miners are now an outperformer to the mama, okay? Silver got punished very badly 2 weeks ago. If you remember, Thursday and Friday, silver dropped from a high that week at 35 to a low on Monday's opening at 27.50. Wow, I'm talking futures now. Whoa. Well, they close out this week at 32. Okay, so a lot of people assumed that silver has industrial aspects, and therefore, if we're going into recession, you sell all commodities, including silver, because it's got industrial aspects. The historical record of silver's trends does not correlate to the Bloomberg Commodity Index. It correlates to gold. And I think the people who shorted, dumped silver a week ago made a big mistake. So I'll tell you what I did personally. I bought a lot of calls coming up out of that hole. I've been expecting an acceleration phase in silver and the gold and silver miners and gold to occur. And the thing that was needed was to break the stock market. Well, we've started that process in a way that people have been smacked in the face. They realize something's happening here. Okay. And they're moving into gold and related. And it's the next phase down in stocks, I think, will drive us off the page in gold and silver and the miners. We predicted before this drop occurred in the S&P that while it was very negative, going down for a long time, expect a bounce point. And we specified a number for the S&P, 4,800. Well, again, we're talking about a market that topped just above 6,000. Okay. It hit 4,830 this week and exploded the next day, which is what we expected to see, a bounce at that level. NASDAQ 100, we predicted, again, this is something that was like 22,000 or something, the peak. It's 16,500. It bottomed this week at 16,500. I say bottomed, I mean bounced. And you can circle those lows on a price chart now. And the public, what they did is, if you go back to 2022 high in the S&P, it was 4,800. So people drew with a crayon, we make fun of them, and a ruler across that high, said, I'm going to buy it at 4,800. Okay, it worked. It should have worked because there were some other reasons for that to work as well. But it's temporary. And for the NASDAQ, if you went back to its peak, which was in November of 2021, its peak area was 16,700. We went down to 16,500 and boom, exploded. You go back through those lows going forward, whether it's a week from now, 2 days from now, a month from now, that's when the public is going to say, oh, hell, it's for real. A lot of them are still debating. You know, they think, oh, if the tariff thing will end, it's all over. Well, Ray Dalio said, and he's right, this is much bigger than just the tariffs. That's an excuse. That's when you'll see acceleration in monetary metals. They're going to start printing. They're going to start buying assets.
Yeah.
And they've waited long enough. And even their friends, academic friends of the Fed and political friends of the concept of the Fed, what did she say? They're in various tools. There you go. She means not just rate cuts. Okay. So they're telling us ahead of time that they're ready to do some crazy stuff. So that balance sheet's going back up, and gold doesn't wait for the facts. It knows it ahead of time. And that means they're going to further degrade the speed of the degradation of the money unit by increasing the money supply. And they're going to come in and buy stuff. The problem is it don't work. Okay. Not in this kind of bubble. We have the biggest bubble in history. The liquidity that they create will go somewhere. But historically, it never goes into the breaking bubble. It goes into something like T-bonds, and it always goes into gold and gold related. I think we're headed for something totally different than the other bull markets in gold, where that was the place to be. Like the run up into 1980, where gold went from a low at $103 in 1976, and by 1980 it was $850. Eightfold move. Or 2000, when it was $260, 2001 still $260, went to 1920, another eightfold move. We started from 1,050, December 2015. Right now we're triple. So we're not even half the multiples of those two prior bull markets, and yet we have the dynamics we're talking about, fundamental and technical, that are far more explosive. And I think on the other end of this, it's not a gold top and another bear market in gold, or silver top and another bear market. If something changes, and I think what's going to change is the world is going to go through such a financial and government debt crisis that there's going to be a rethink, a chaotic, panicky rethink of reality. And I think some of the old realities are going to get tossed out the window. Assumptions, institutions. I think the Fed will cease to be. Wouldn't surprise me it happens the next couple of years. The viability and what it's done over its century of life is to create monetary boom bust, which soon thereafter are duplicated by stock market booms and then busts. It's just a recurring thing. I think we're going to a hard money standard around the world at the end of this crisis or late in the crisis. So when gold gets up there, again, an eightfold this time around, it'd be like, well, multiply 1,050 times 8. Okay, we'd be doing the same thing we've done before a couple times. But we could go a lot higher. That's not the issue. The issue is I don't think we're coming back down Because I think so many of the things that we think of as institutions and realities won't be there. And we're going to shift to gold-backed money. You already know the Chinese are talking about it.
The mama market is on the move, and the puppies are catching up fast. Gold, silver, miners, they're not just rising, they're breaking out. If you're still watching, you already know. This is no ordinary moment. Hit like, drop a comment, don't forget to subscribe and press the bell icon, because the next surge might come faster than anyone expects.